Hello, ladies and gentlemen. It's a modern investing, and on Pod TV, my name is Sasha Star, and today we have a distinguished guest, Dr. Milan Sombrak. Welcome to the show,
Yeah.
and we have founder of the network, Nick Paliveda. Welcome to the show, Nick.
I'm in.
Good, and we have also a producer of Pod TV, Mark Lee. Welcome to the show, Mark.
Mark might. Oh, there he is. He's here.
There he is. Okay, so earlier in the program today, we discussed artificial intelligence. We touched the idea of using artificial intelligence in stock selection, and we just touched that. All I want to say is that the artificial intelligence being used now for ages, especially in a program trading, which has been around for well over 20 years by leading investment houses such as Goldman Sachs and JP Morgan. And that basically involves a finding discrepancy between price of S&P 500 and the options or futures on S&P 500. So, for example, if futures are moving higher, and S&P 500 stays the same or moving higher but slower than futures, then you might as well sell futures and at the same time buy S&P 500 stocks. So this way you collect quite insignificant. This is why it's so difficult to implement in individual trading, because we are talking about sometimes a fraction of a dollar, and you have to repeat it several times during the day in order to reap significant rewards. And of course, computerized trading implemented by leading investment houses, they're very good at it. And this is why when you look at the reports of, let's see, the leading houses, you will see that the proprietary trading generates more profits than anything else. And the proprietary trading is exactly that. You have to be precise, you have to do it several times a day, and back and forth, and so on. Now, when it comes to artificial intelligence as a stock selection, that's probably also been around for some time, although some people perceive that it's very new and revolutionary idea. Is, you see, my approach is that they are basing their predictions on analyzing data which is available today to anybody. And I don't see how beneficial it could be to find some kind of a right stock when everybody else can do exactly the same. So if Goldman Sachs has this artificial intelligence to select stock based on certain parameters, Goldman Sachs, and then JP Morgan will do basically the same thing, and then several other houses will do the same thing. So where is their advantage? Milan, what can you say on this?
Let me comment on it this way, Sasha. When an investor does anything, buy or sell, he's acting in the opposite fashion of another investor. When he is selling something, he's selling it to somebody who is buying it. When he's buying something, he's buying something from someone who is selling it. Doesn't it work that way also with artificial intelligence? That is when, and the banks, the investment banks are all using artificial intelligence. If the artificial intelligence makes a selection, is it not going opposite direction of another artificial intelligence that's working for another bank? Person to person or artificial intelligence to artificial intelligence. I mean, what artificial intelligence can achieve is mind-boggling and incredible. They're composing music, they're writing essays with perfect punctuation and that sort of stuff. But when they are selecting stocks or selling stocks, they're working against another artificial intelligence operation, are they not?
I'm thinking that most likely artificial intelligence would give the same signals to all investment houses because their selection is based on certain formula. And I'm not so sure that banks have in artificial intelligence selection of stocks. There could be some proprietary product or selection which is not available to other banks. Nick, what do you think about it?
Well, Sas, as you well know, that two types of investors are, well, actually, maybe three types. One is technical analysis. In other words, are they looking at the trends, the CPAM trends, and artificial intelligence seems to do a good job on technical analysis. The other investor is fundamentals. In other words, what business are you in? Are you in the automobile industry right now? Probably not a good place to be unless you're Tesla because you're not on strike. Or are you in the hotel industry? Maybe a good place to be because people use it. So there's the fundamentals also as well. And then there's the third type of investors, really wild. They're basically grabbing on to the latest trend. And we saw them in cryptocurrency. We saw them in the movie industry. They were going after GameStop, and they were going after certain of these stocks that may have violated the two fundamentals of most investors, which is technical analysis, which computers do quite well, and fundamentals. The problem with taking all the computers' technological analysis and using artificial intelligence is when information comes to you, such as the UAW is going on strike. How do you value or revalue that stock when they're not producing anything? And is the computer program inputting that, and what value are they assigning it? Which is also arbitrary when you're doing an assignment like that. So the computers just haven't got there. And that's one reason you said on the earlier show that you use basically your instinct to either go or stay away. And with the UAW strike right now, it creates uncertainty, which people like Milan and I are not favored of because that's a risk. And so you tend to stay away from that type of stock, even no matter what the technological analysis.
Technological is the word you're looking for, but just really, just really quickly, Milan, because we had talked about that earlier. That's what Sasha was referring to in it earlier, and I know that you are a big fan of the S&P and other things that are going on. But I'm thinking that a lot of the financial areas, whether that is New York, whether that is London, whether that is a number of other places, are actually using AI on a regular basis, whether Sasha and Nick want to believe that or not. But I'm just wondering what you are finding with companies that are using AI even in some of their own conversations and in some of their own stock portfolios, because I'm actually thinking that there are a number of stockbrokers that are actually using AI on a regular basis, but you talk to them more than I do. So tell me what you've been observing.
I think that we should be concerned about AI because experts, not people like me, but experts who understand this field from a position of profound knowledge are all warning us about AI and saying that we should stop developing AI until we've had a chance to examine it further and be able to study the implications on our lives that AI can produce. So they're worried about it. If they're worried about it, we have a right to be worried about it. Now, interestingly, Warren Buffett's mentor, Benjamin Graham, said that achieving satisfactory investment results is easier than most people realize. And he was talking about buying the American market as a whole, the most productive economy that the world has seen ever, and buying it as a whole by investing in an exchange-traded fund which tracks the S&P 500, which is a reasonable representation of the American economy as a whole, and that has inflation-adjusted returns are a little over 6% annually. And do we need more than that? If we're happy with that, as we ought to be, because generally it's recommended that when people retire, they withdraw 4% of their portfolio. And if their portfolio is generating 6.25% inflation adjusted, do we need more? And matching the S&P 500 is something that we can teach a high school student in a matter of minutes. Here, I'll do it right now. Open a margin account which allows trading options and put all your savings into it using SPY as your security selection, because SPY represents the S&P 500, which represents the American economy as a whole, the strongest economy the world has ever seen. That is as simple as that. And then we don't need to pick stocks, because picking stocks is an attempt to improve on what I just described here, and very few people do it. Sasha,
Milan, just really quickly, and then because you said that several times, and I was wondering, there is another part of the economy and the world. Nick has alluded to them as before and everything, and I definitely believe in American products and American companies and everything. But there are two countries out there in the world, that being India and China, that have billions of people. So should we be investing in their stocks as well and everything? Because it seems to me that they are making up the vast portion of the population by your theory. Then we should be investing in companies that are coming from China and India as well. So any thoughts around this, Milan? Because they make up more than a half of the world population, well, maybe not half, but a significant part of the world population.
No less a publication than The Economist. And The Economist is a publication that's read by everybody who is anybody in the world of finance, in the world of public relations. No less a publication than The Economist said you cannot trust Chinese numbers. That says something. And the fact that India is growing, and now I think that the population of India has now exceeded the population of China, where they had limited children to one per family. Now they're allowing more than one, especially if they live on farms. But the Indian population, especially a lot of Indian farmers out there, are having 10 to 12 children because they need them to work on the farm. The minute they're old enough, which is about age 6 or 8, they start doing something on the farm, something productive. So I don't see how India could be a threat just because of the number of people that it has.
Well, also today, when you buy in the S&P 500, you're already buying into India. For example, IBM has more employees in India than any other country, including the United States. Pfizer has a lot of employees in India. And so when you buy the S&P 500, you're not buying just the United States market today. You actually are buying a worldwide market.
Most major companies would have a presence in most countries, wouldn't they?
Yeah, they do. I mean, the thing is, the larger the company, the more they have international subsidiaries. For example, Principal Financial also has in Latin America, they have insurance products offered there. They have insurance products in a lot of different countries. So today, when you and they're traded on the big board also as well.
But Nick, that's not just the United States. We live here, me and you do, Nick, in North Carolina. There was a time that I worked at the shipping and receiving for a company called Glaxo. It's now GlaxoSmithKline. If I remember it correctly, that company is actually a UK company. And all along those lines, and Rhone Polnick, which is also based here in North Carolina, is a French company. So there are a number of companies that are actually global companies that have bases here, but their actual corporate headquarters are actually on the global level, to your point, and everything, because that's what we see even here in North Carolina.
Yeah, most companies that are larger companies today are multinational corporations.
Well,
So,
there are years when certain exchanges, whether it's London Stock Exchange or German or India, for example, they could exceed return of S&P 500. But overall, if we are talking about, say, 100 years, obviously nothing can be compared to S&P 500. However, what I wanted to say is that S&P 500 is not some kind of a special animal which is unique, unparalleled to anything else. It's just a selection of 500 stocks. And if you analyze what's happening with the S&P 500 during the last year, you will see there are obvious dogs, such as Walgreen Boots, and there was a few others. But if you will exclude top seven stocks, which are FANG stocks, NVIDIA, you will see the S&P 500 didn't have any positive returns during the all last year. It's just 7 stocks, so 493 stocks didn't have any positive return whatsoever. It's just 7 stocks. So the first question is, why do you need 493 stocks when you can concentrate on the 7 stocks? And that's all what you need, because without progress of these 7 stocks, there will be no progress in S&P or Dow Jones or the Triple Q, which is Nasdaq top 100.
Sasha,
Yeah.
let me ask you this. Why would somebody like David Swensen, the late David Swensen, who ran the Yale Endowment program, the most successful of all, Harvard is larger, but Yale was much more successful, spectacular growth. Why would somebody like David Swensen say something like security selection and market timing make no material contribution to returns? Why would he say something like asset allocation by far gives them best returns in portfolio asset allocation? Now, if you take a look at SPIVA, which stands for S&P 500 versus active investing. Active investing means picking stocks. There's almost no chance that any investor can equal the S&P 500 over a long enough period of time. So you can check SPIVA and then put down any security there, or put down S&P 500 in there, and you will see that very few investors, close to zero, can equal that. Now you're talking about investment, what do you call them? Investment stars, investment, the book that you referred to, Sasha.
Market Wizards, perhaps.
Market Wizards. They could be market wizards out there. There could be a Mozart in investing too, and I think you might be one of those. But certainly,
Sasha's definitely a market wizard. Hey, speaking of being a market wizard, Sasha, and everything, I've mentioned Lululemon on our other show and everything, and there is another company that you have mentioned, and you've said it several times on this show. You love this company dearly and everything, but when I look up NVIDIA, it's actually listed as an AI computing company. So how can you like something that you apparently don't like, because you said that you don't like AI, but when I look it up, the NVIDIA is listed as a world leader in artificial intelligence.
That's all fine, except they could be, at one time, NVIDIA was a leading platform to supply crypto exchanges. It was 3-4 years ago, was substantial part of their business. And then slowly they ditched it because they saw no future in this so-called crypto activities. So they don't, they supply from time to time this because they're so advanced in many respects, except that beside artificial intelligence, they have so many other viable and very profitable segments of the market that artificial intelligence, look,
but this... I mean, they're considered the leader in the artificial intelligence chip. So,
but they were leaders even before people learned what is artificial intelligence. They were already there simply because of their development. Now,
right, they were a pioneer.
No, you can call now Lululemon a leader in artificial intelligence because they developed a certain proprietary processes that rely on some elements, I would say, of artificial intelligence. Anything what you do, what we are doing right now, it's artificial intelligence.
Yeah. Well, I'm looking up the NVIDIA website. The NVIDIA website says NVIDIA Drive is a scalable AI car platform that spans the entire range of autonomous driving. 225 companies around the world have adopted the platform, ranging from car companies and suppliers to startups and research organizations. So it sounds to me like the company itself is saying that they're in AI.
That's fine. That's fine with me. They can say anything they want about themselves. Look at their profits. This is what's the most important. There are several artificial intelligence companies that never had profits in their history. They're still trading in multiple.
More of those, the winners. You know, if we take a look at the put-call ratio, and the put-call ratio precisely tells us how investors feel about a security. And you take a look at the put-call ratio in NVIDIA, a week from now is negative. A month from now is negative, and a year from now is negative. The put-call ratio. More investors are willing to get out of NVIDIA than to get into it. That says something, doesn't it?
It's very
Yeah,
simple.
it only says one thing, in my opinion, is the stock may be overpriced. In other words, there are stocks out there that are good stocks. I invested in.
Good point. Good point. Yeah.
I invested in Planter Technology earlier this year, and then it made what I call a bump up, a big run, like 25% increase in a month, and I sold it. And I'm sitting there going, sometimes I feel I make mistakes because I get out too early. Well, I just checked the stock. It's been flat ever since. There is, you could have good companies that are overvalued. And the real problem is because people generally, especially the individual investors who invest, and sometimes the corporate investors make a mistake and they buy overvalued stocks. So the problem with NVIDIA isn't because the company is good, isn't because it's profitable, it isn't because it may be profitable in the future. It might be temporarily overvalued at this point.
Hey, Nick, just really quickly, because you used a term that I have heard people use before, and I'd love to hear everybody's thoughts on this and everything, but you used the term multinational corporations, and I've heard that term used favorably, but I've also heard it used unfavorably or unfavorably as well. So what is the advantage of being a multinational corporation, and is there any disadvantages or reasons that people should not want to be multinational? Because I've heard some people, particularly those that might be a little bit more on the left, that will say that they are not the biggest fans of multinationals. But I was just wondering your thoughts around that and whether there's something we should be proud of, these multinational companies.
Well, whether we like it or not, Mark, we live in a global economy. One multinational company that everybody will visit this year probably is Walmart. Mm-hmm. They import a lot of their products from China and they put them on the shelves and they sell them at a discount. They're a multinational company and they're one of the largest employers in the United States. So part of the reason there's multinational corporations is that the purchase of goods and services outside the United States could be more favorable. For example, you may buy coffee from Colombia. So Folgers is a multinational company. Money is multinational today. It moves across the borders very instantaneously. So whether we like it or not, we are in a multinational scenario. And whether you like it or not, if you invest in the S&P 500, you've invested in multinational companies today. That's
the reason I heard people did like it was because of its ties to quote unquote imperialism and all along those lines. So a lot of times people would get frustrated. That's when the whole notion of multinational corporations, even with apartheid, came up and everything, with people were talking about its ways of exploiting some of those countries that you just mentioned, like Colombia and the coffee workers and a number of other folks.
Okay. If you haven't seen the movie The Wolf of Wall Street, if you can get away from all the language and the garbage there, a lot of it is actually pretty good. And one thing Matthew McConaughey said that, people are in Fugazi, they're in La La Land. Unfortunately, Mark, there's a lot of people that are in Fugazi, La La Land, when it comes to things like multinational companies and imperialism that exist in the turn of the other century before the other century. Today, that's just not the case. What happens is we basically have an international community, minus Russia, who decides they don't want to play good, and China, who wants to play with Russia. But the rest of the world is very, very in tune with multinational business, and businessmen like to do business whether or not their countries are corrupt.
So we're okay with China coming in and buying up all the land in the United States, because that's the other complaint that people have about multinationals. They're coming in, buying up literally the United States without us really paying any attention.
The fear mongering that took place years ago when Japan, quote unquote, was buying all the United States. Right. And then Japan did come in. They bought a lot of land in Manhattan that eventually had to sell at $1 billion plus losses because, again, they overpaid, they overvalued for the Manhattan properties. China is not going to come in here and just buy all the land and stuff like that, even though their economy is strong. It is also international, and they only invest a certain amount in the United States. They're not going to go whole hog and just put everything here, because they have the same fears that other countries do. Fear that the United States will seize their assets, like we did with the Iranians in Korea. So because of that fear, they'll diversify and put a certain amount of assets in the United States, but they're not going to buy everything. However, if you want to live in fear and La La Land, then of course you make stories like that up because they're more interesting than what really.
I want to back up for a minute to what you said earlier, Nick, was that you sold too soon. One of the Rothschilds said.
Sometimes I think.
One of the Rothschilds said that I made my money by selling too soon.
Right, exactly.
Let somebody else make a buck too. Concerning China, you know what they've done? They overbuilt towers. They overbuilt apartment blocks, huge apartment blocks, which they're unable to sell. So now they're blowing them apart, which is the same as digging a hole in the ground and then filling it up, and then digging it again and filling it up and getting paid for each of those steps. They're blowing up towers, residential towers, which they have been unable to sell. So when they blow them up, they have destroyed something that they've done, and it gives them a chance to start building again. So that's an interesting proposition, isn't it?
Yeah, go figure why they're doing that. Doesn't seem to make any sense. But in the United States, we also do have situations like that when there's an oversupply of, let's say, cattle, or the oversupply of certain types of agricultural products. They actually will destroy the agricultural product because they can't get anything in the market today. So we do also see that, unfortunately, here.
Starbucks at one time had in New York City an outlet almost on every corner, and they wound up closing some of them, basically destroying them, because there was an oversupply of Starbucks outlets. Sure, yeah. So what you're saying there about cattle and other commodities, futures, is true. Oversupply happens often. Yeah.
Marco, what I generally would like to say is that what you raised the question about multinationals, it's a much more political issue than business issue, because decision for the company, if it's a U.S. corporation, to go to other countries and then become multinational corporation, this is a purely business decision based on the metrics of this particular company and its development. That's all there is to it, to create more profits and becoming more global in its nature. Some companies are, for example, right now, they're cutting on their political ambitions and being multinationals. For example, I own one stock which pays very attractive dividends, 8.5%. It's British American Tobacco. Their stock went down from around $40 a share. It's now trading around 33 something. You know why? Because they exited completely business in Russia. Completely, 100%. Their products are no longer available to Russia. They had to have their cut in profits and their stock price. They're still paying very good dividends. Hopefully they will replace that business by increasing they have very good products, of course, and probably they will find some other markets. But they made a decision to completely exit Russian market. There are some other companies that did the same thing. So this is a really political issue, much more than business issue. Now, what I would like to say is that in your proprietary trading, when you mentioned, Milan, some gurus from Yale endowment funds and many others, whether it's good or not, but it works for me. I read my own book on investing. I really don't read anything what you're referring, except Wizards, and even in Wizards, I read only one topic is about legendary William O'Neill, and I follow rules defined by William O'Neill, although with some adjustments. For example, he recommends selling stock if it's losing 7%, out. Sell without questioning that it may reverse, it may do this, and so on. You'd sell, and then you watch. It will start going higher. After establishing a base, then you go in. Get back to the stock.
Let me ask you this, Sasha. What percentage of investors are market wizards? Much closer to 0% than to 1%. Isn't that true? So
Yeah,
you are a market wizard, but most people are not. Most of us are not market wizards. So the fact is that most investors trail the market. Equaling the market, right earlier, is something you could teach a high school student in less than 5 minutes. But equaling the market, beating the market is achieved by very, very few investors.
I know, Dylan.
0%.
There are courses that can teach you English in 2 weeks, play piano in 2.5 weeks, and many others. Okay, let me tell you something.
Sure,
I listen to the music, and I listen to, say, third Rachmaninoff piano concerto. I'm listening only to the top pianists like Horowitz, like Rachmaninoff himself, and a couple of others. That's it. I'm not going to listen to a student, third grade of a Conservatory of Music playing Rachmaninoff's third piano concerto. I'm not going to do that. So this is why a hell I have to worry about people like you're saying that you will teach any third grade student how to trade S&P 500 when I've developed a concept which allows me, I'm waiting for October 16th. On October 16th, it would be 1 year since I adopted my trading system. And so far, I show profit of 200%. I'm waiting, actually, I cut down on trading in the last couple of days simply to wait until the October 16th, not to spoil my result of 200%.
So, Sasha, I've been playing the violin since I was 5 years old.
Okay.
And I play almost every day. I play every day. I have a violin downstairs and upstairs, not in the case, but not outside the case.
Okay, I heard you playing violin.
And I'm still no good. Now, I can take a course about how to learn to play the violin well in 2 weeks, right? Tell me where I can do that. Yeah.
There are courses. Go to internet and say, play violin in 2 weeks. I'm pretty sure you will have a great.
There are courses like that exist on the internet. There are definitely courses about all kinds of stuff in that space and all along those lines. And by the way, the reason I was thinking about the multinationals, just to let you know, Sasha, is I was actually thinking about a incident that happened many years ago. It was actually when I was dating a young lady, and my dad is not the biggest fan of the exploitive nature of some multinational corporations. So he was actually, I think, doing something with his work, which at that time was at a UNC school and everything. And the woman did not understand what multinationals were. So she basically got a dressing down by my pops, who does not play when it comes to addressing folks if they are going to be stupid in their arguments and all along those lines. So he basically dressed the young lady down because of her not having an understanding of what multinationals were. But that's neither here nor there. But the question I have to ask for you is, there is a very popular thing that is going on in society, and I was wondering, should this be something that folks might consider investing in? Because we've had guests that have been in the wellness space, and there are a number of folks that are looking at natural foods, natural this, natural that, and everything. So I just wondering, to you and Milan and Nick as well, is there are any things in that natural food space, whether that's one of those bread companies or one of those cereal companies, that folks might want to consider going into, because natural food seems to be very popular these days?
Since you're asking me, let me quote Hippocrates, father of medicine, who said, "Let food be your medicine." And when he was talking about food, he was talking about what we might call Mother Nature's pantry. And Mother Nature's pantry contains nothing but food that is good for us. It hasn't been altered in any way. It hasn't been processed in any way. So it's all superfood. Everything is a superfood until we touch it and process it. So you take something like a potato. Empires have been built on potatoes. So they take that potato and they beat all the nutrition out of it, and they make it so that it has an indefinite shelf life, and they price it as high as the most expensive cut of meat that you can get. And that works from a business perspective, absolutely. Doesn't work from a health perspective. All we have to do from a health perspective, eat from Mother Nature's pantry. And it's pretty hard to improve on that.
Yeah. I also do think you have to look at your risk tolerance when it comes to investing in the S&P 500. For example, if you're risk averse, you might want to be in treasuries, which right now are paying pretty high on the 10-year. It's like 4.35, or even certificate deposits. We just bought a bunch of those. I mean, because they were paying over 5% right now, and our risk tolerance was low. Plus, we want to have a lot in reserves for other things, because the other problem with money, you may have other allocations for it. So it's not just investing in the S&P. What's your time horizon? Because you don't know. Let's say it took a big hit like it did in 2008. you may not get back to normal for another 3, 4, 5 years. So you have to be very careful and look at your own individual situation as to what you want to do and what your time horizon is before you say, hey, I'm going to throw everything in the S&P 500 and walk away. If life was that easy, everybody would do it. But unfortunately, it isn't. If you have more risk tolerance, like Sasha does, you may want to say, well, let's do some covered call writing on NVIDIA or put it in MPLX and grab a greater percent. So it really depends what your own tolerance
Well,
level
speaking
is.
of tolerance, Sasha, this is interesting. I just found out. Apparently, the biggest potato company, we're talking about like food and healthy food, but apparently the biggest potato company is actually something that is known more for its sodas than its potatoes. Because when I looked up the top 5 potato companies, PepsiCo is the leading potato company, followed by Givaudan, Lamb Weston Holdings, Campbell Soup, and Nissan Foods Holdings. So it looks like those. I don't know that anybody would think of Pepsi as being a leading potato grower, but apparently they are.
Let me just, before we finish our program, I thought about my strategy and was trying very hard to find something similar that could I wanted to to defend my strategy against others. And if there is no strategy like that, then I made a brilliant discovery. Now, if there are some similar strategies, at least I wanted to know what they are and how attractive they are. And indeed, I found one very interesting strategy. It's actually they have ETF. All their strategy is selling covered calls on NVIDIA.
NVIDIA seems to be.
Now, you know what they're paying out to, you know how it works. Okay, they have about 1% management fee. But every month they're distributing the profits, what they're making from writing covered calls, and annualized, that is 50%, 50.
Sasha, that's incredible. And also, in a rising market, investors are better off holding the security instead of using it as the underlying security.
Along those lines,
But they distribute every month. They don't hold on to anything. Mark, excuse me. They have a bunch of NVIDIA stock. Let's see, 100 million shares, 100,000 shares. I don't know exactly.
Yeah.
They don't trade it. All what they do is a month after month after month selling covered calls. So if stock of NVIDIA will go from, say, 450 to, say, 400, right? They will still sell covered calls.
Okay. Yeah, but NVIDIA's prospects long-term are positive.
Nobody cares about their long-term projects.
But speaking of long-term,
they are collecting premium and distribute premium.
But speaking of long-term, because I want to get to a North Carolina company, because apparently they are a global company, and I just mentioned them earlier and everything. So, Milan, since you are into the stock market, and like I said, I have not gotten into that yet. Hopefully we'll do that in the near future. But there is a company here. PEP is their number on the stock market, PEP, that being PepsiCo. It is a North Carolina-based company, and it's got a market cap of 244 0.62 billion and everything. So should I be looking at investing in Pepsi? Because apparently they're into potatoes and they're into sodas, and that looks like a whole lot of money. And that's as of today, September 19th, that Pep is got those kind of stocks and everything. So
our philosophy recommends that we don't invest in individual stocks or individual areas, but that we invest in the United States economy as a whole by investing in an exchange-traded fund which tracks the S&P 500. And that gets wonderful results. The track record shows that. And Confucius says, study the past if you would define the future. It's worked for the last couple of 100 years and likely to continue working for a long time yet. As I keep saying, empires have a 100% failure rate. But the failure of the American empire is nowhere near in sight yet. Everybody wants to be in the American dollar. Just take a look at what's happening. A few years ago, I think I mentioned this earlier, a Russian submarine failed and all the sailors in it drowned, the Kursk it was called. And the widows were compensated, and Putin himself said to the widows, take your money and put it in American dollars. Putin himself said to the widows, take your rubles and put them in American dollars. What's that tell you? Yeah.
Hey, Nick, you need to go invest in Pepsi because apparently they've got offices right here in Durham. I know you just recently moved to Durham. They've got offices here, including some bottling companies and other things, even though it is a Charlotte-based company. So I'm thinking that you're going to go in and invest it since they're literally around the corner from your new home and everything.
Yeah. I mean, I'll look at it. There's also one in Raleigh, Advanced Auto Parts, but they're not doing very well right now. And investing, I agree with Sasha. There's a lot of stuff you do before you basically make a sizable investment in any particular stock. And there's a lot of factors that go in. I believe that the S&P 500 is more multinational as you're investing in, but also you're buying the top 500. If you went into a university or all the universities in the United States and said, I'm going to pick out the top 500 students at these universities, let me tell you, you got a good group of people. Or you go chess players like Sasha. It goes, well, I'm going to take the top 500 chess players in the world. You probably have a really strong chess team. Now, of course, the other issue, should you even get 500, probably the top 100 are strong enough. Traditionally, though, it's been the S&P 500, but perhaps the top 100. There's absolutely no question when you go get the top of anything, you're getting selectively a better group of people. My problem is I just don't want to overpay for that. In other words, I'm not going to overpay for the S&P 500 if the S&P 500 is overpriced at any particular point in time. And that's a really hard thing to do, is to figure out.
Major difference between chess playing and investing is this. Chess players who are not ranked very high can have a wonderful time playing chess, even if they have already wonderful time. I don't have a wonderful time losing money.
Yeah. Well, also, Milan, your strategy, it sounds like you keep a certain amount in reserves. So in the event there's a downturn, that's the opportunity to buy more.
Well, that's
buying on the low, which makes a lot of sense.
Okay.
You don't throw everything in. You actually carry a significant amount of reserves. And when you have reserves, that gives you a lot of flexibility in terms of your investing strategy.
Yeah.
Which makes a lot of sense, in my opinion.
If it's good enough for David Swenson, and that's how Warren Buffett wants his money invested, so that he's leaving his widow, it's good enough for most of us.
Yeah.
Hey, Sasha, I know you want.
Yeah, sorry.
I'm sorry. I know you're winding down, but one of the companies I saw from Canada that was apparently doing good was something called Victoria Gold, and that's thinking is an actual gold company. Ironically, they're also in the potato business as well. But what do you know about this company? Is that something that people should be looking at? Is gold? Because I did see that they were a leading one in the S&P and everything, but it was something called Victoria Gold based there in Canada. I'm guessing around Victoria, Canada.
We can talk about maybe next Wednesday. I get a chance to study it a little bit.
Okay, fair enough. Okay, I would like to thank you all for participation in today's program. We have a lot of questions which were not answered properly, and probably that's my fault. But we'll correct ourselves next Wednesday, same place, same time. Have a successful week trading. Bye-bye, everybody.
Thank you.